some hints on how to study for the finals. Right. So the final, guys, it's an integration. All right. You're going to find out that they integrate separate topics into one question. All right. So I urge you guys to actually work on the question banks, which I believe they gave you the final question banks. All right. Those are very good pegs to actually prepare for the final. So I encourage you, do as many as you can, all right, in regards to those specs. All right, there's another thing. The reason why, I actually, if you notice, I removed the midweek class, all right? It's not like I don't want to help you guys or something, all right? For the final, when you're preparing for the final, mostly you'll be sitting in the venue alone. So it's important that you also have your own time, all right, in which you look at the questions on your own, help yourself to think through things in that regard as well. That is why I do understand you guys go to work, most of you guys, so you don't have enough study time. So I said, okay, no, it's fine. Let's just remove the midweek and then we do classes on Sunday. Unfortunately as well, for Sundays, most of you guys were not attending, all right? It was because, I believe it was because most of you guys thought you didn't qualify for the exams. But if you recall very well what I said, I even told you guys that as far as I know, UNISA, there's a chance that they might take best two, all right, of the test, or they'll allow everyone to write. The reason I gave you guys that it was because the marking process was very slow, right? As well as there was lots of cases about the submission. But anyways, I hope everyone is in full gear, but don't panic. There's still lots of time to catch up and still make it. All right. So the first part, which is part A for question, which I believe if you managed, all right, you could have attempted this question. So it says calculate the normal tax liability of Viva Gym SA for the year ended 30 September 2022, starting with the accounting net profit, all right, comprehensive income before tax of 3,608,360. Show all your calculations, address all items, and if no adjustment is required, clearly indicate this with a brief reason or reference to correct legislation. You may assume that Viva Gym SA wants to limit its normal tax liability for the 22 year of assessments to a minimum. All right. So if no adjustment requires, all right, they want you to give a brief reason and or reference to correct legislation. So there was a lot of requires, all right, in regards to this question. So it was expected of you guys to actually work on this part. All right. So now let's now quickly get into it, all right, so that we can see now what's going on in terms of this. All right. So now, guys, the first thing, all right, when you see this type of a question, as you can see, the starting point is accounting profit, all right, before tax. So now what happens now is this type of a question is a little bit not as easy as most of you guys would think, all right? So if you're not careful in the exam, all right, these are the kind of questions where you know your work, but, all right, you will not be able to actually collect the sufficient number of marks that you would expect in this regard. So I urge you to be careful. But anyways, what is going on in terms of this question? Now we're starting with accounting profit, which means now some transactions, all right, some transactions have been correctly accounted for, right? We have certain rules that applies, the same between tax and accounting, all right? Then we have some transactions now which were never accounted for, right? Then we have some transactions which were treated different between accounting and taxation. All right. So in regards to this, think about things like depreciation. All right, just as an example, do tax calculate depreciation? The answer is no. We cannot agree that taxation does not calculate depreciation. They calculate wear and tear allowances. All right. Think about when you sell an asset. What happens? Accountants calculate profit or loss on sale of an asset, but SARS would come in and say, no, we calculate recoupment and capital gains tax. So already you can see there are differences between those two. All right, so all you need to understand is with regards to some transaction, have an understanding to see, okay, this transaction, accountants have already treated this transaction. All right, so what is SARS going to say about this transaction? If it doesn't have a tax implication, you reverse it, you remove it from your accounting profit, or if it has a different accounting treatment, you also remove it from the calculation of profit, then you do the correct thing with what SARS will do. All right, so let's look at the scenario. So we're just gonna, since you guys, I believe you guys have worked on this question, I'm just gonna work on it as we go by. All right, so a tax consultant at a tax firm in Pretoria, the tax director has secured a new client, namely Viva Gym SAPTY, thereafter Viva Gym, and the firm has approached you to assist with the client's tax-related matters. Viva Gym is a company resident in South Africa and was incorporated in 2000. The company designs, manufactures, and supplies high-quality gym fitness equipment. The commissioner regards this as a process of manufacture. All right, this is quite important. As you can see now, the company that you're representing, which is a client, they're actually involved in the process of manufacture. All right, what does this affect? So it affects one, all right, if it happens that the company has manufacturing machinery, all right, and equipment, you now know that you're going to claim those 40% allowance in the first year, 20%, 20%, provided the asset is bought new, all right? So process of manufacture, all right, just writing small notes. All right, so you can now see, all right, that the company, all right, manufacturing equipment, plant and equipment. All right, so in this case, acquired new, you're going to claim 40%, 20%, 20%, and then 20%. All right, and then second hand, you're going to claim 20% per annum. All right, I hope you guys remember that. If it's a small business, what happens in this regard? For manufacturing assets, claim 100% allowance in the year that you acquire the asset. I hope you guys you recall in regards to this. All right, then we move on. Viva Gym equipment. So the equipment only to various local fitness centers around the country, one of which is its subsidiary, Proactive. Proactive is also resident in South Africa. Now, do you see? Proactive is a subsidiary, all right? So Proactive now is a subsidiary. Subsidiary. What does it mean? Connected person, right? So you bring in the rules that applies in regards to connected person, right? So you're going to find out we have a number of rules that applies in regards to connected persons, right? If you sell to a connected person, remember, the sale is deemed to have taken place at market value, right? Provided the selling price was less than the market value. So we regard the selling price to be at market value. So it's quite important that you remember those implications, right? And then as a resident in South Africa, Viva Gym holds all the issued share capital of Proactive and has done so since the companies were incorporated. Proactive is one of South Africa's leading fitness centers with over 500,000 members. It also sells branded gym accessories to its gym members at low prices. Both companies have September financial year end and registered VAT vendors. Right? What does it mean? It means the amounts that we record here supposed to remove VAT and making 100% taxable supplies. All right, 100% taxable supplies. All right, what does it mean? All right, no apportionment of VAT input. All right, remember that rule where we said if a company makes less than 95%, all right, taxable supplies, we apportion VAT input. I hope you guys still remember that. And also, if it's with regards to, in terms of this, if it's regards to, what do you call it? The the amount you collect from the insurance, right? So in this case, those amounts we also, if it's VAT output, right, the collection from insurance, we also apportion that VAT output in this regard. All right. So that's actually a good part, right, in regards to this part of the question. All right, and then I hope these principles are coming back, right? I'm just helping you guys to revisit. All amounts exclude VAT were applicable unless specifically stated or implied otherwise. All right. So, and then the next thing now is all transactions were entered with registered VAT vendor or valid tax invoices and the requisite supporting documents are in place. Apart from any transaction within the group or other transaction are between independent parties, both companies are not small business corporation. Now, do you see? None of them is small business, which means this section is not applicable. All right, so I'm not saying in the exam you should be reading, right? But this should be happening at the back of your mind, right? I'm not saying write down things, right? But it should be happening at the back of your mind. But I recall when I was in your position during reading time, I'll be making small notes for myself, right? What is the implication of this, right? So that's what's going on in this regard. All right. Let's move on to the next part. The group accountant, Miss Lamini, has omitted certain amounts. Do you see? She omitted, which means now some of the amounts were not included, all right, in the calculations of the profit. So now you have to pay careful attention on which one has been included and which ones has not been included. All right, from the accounting records, as she was unsure on how to treat them, she provided you with the following extract from the pro forma statement of profit and loss and other comprehensive income of Jim for its financial year ended 30 September 2022. So these are the transactions that our taxpayer now dealt with to come up with this profit, right? You see the net profit of 3,608,360. All right. So let's look at it, right? To see now what's going on, right? So before we go anywhere, let's look at the sales. All right, you can see this is a calculation, all right, in regards to this part of the question. Right, so our sales amount, all right, is 18,080,000. All right, so that is the sales amount that we are sitting with. Let's see now what is happening. So sales for the year have been correctly accounted for and amounted to 18,880,000. So starting point, we're starting off with net profit. All right, so you record the net profit which they gave you there, 3,608,360. Right, so that is our net profit. So you're now sitting with sales, right? So you're being told, all right, in regards to this part of the question that this sales amount, all right, this sales amount have been, all right, they've been accounted for correctly. So now, what do you do in regards to this? There's no adjustments. We can agree that there's no adjustment with regards to the sales amount because it has been accounted for correctly. But what is going to be your explanation? Remember, the question says when there's a new amount, you should actually include an explanation. So what do you do with regards to that? So you can either write down section 1, gross income definition. All right. So remember, sales form part of gross income. And in terms of the SARS definition, we include gross income in terms of section 1. All right. I hope you guys know where to find the definition of gross income, all right, in terms of section 1. So you write down there, all right, included in terms of gross income. Let's look at the next part. So the next part is cost of sales. They referred us to 2. All right, during the 22 year of assessment, Viva Gym donated 5 trend meals with a cost of 17,000 each. All right, at market value of 15,000 each to fitness and wealth organization, approved public benefit organization, and obtained a valid section 18A receipt. Now, guys, inventories, I assure you guys, in your exam, you're going to meet section 22, right? Those donations, those transfer of assets within the company and all that, you're definitely going to meet section 22, right? And then to the guys I had during the year, I'm sure I remember I even shared with you how my legislation looked like with regards to the highlight. So make sure your section 22 is actually looking good, all right? So in terms of this, all right, cost of sales, the calculation of cost of sales, both accounting and SaaS, they do the same calculation of cost of sales. It's opening inventory plus purchases minus closing inventory, which is still fine. But the difference now is accountants do not calculate recoupment when you donate inventory. So that is where your difference now is going to come in place. All right, so in regards to this, the deduction, all right, of these items as opening inventory and all that is still the same. Remember, with accountant, with value, inventory at lower of cost and net realizable value. SaaS will come in and say, we value inventory at lower of market value and cost, which is the same thing. So in this regard, the calculation of cost of sales is still the same. But the difference now comes in with regards to the recoupment part. So section 22, all right, if you guys open your legislation, if you go to section 22, that's the one that deals with inventory. You're going to find out when you make a donation of inventory to a registered public benefit organization, recoupment is done at cost, all right? And then when you make a donation to a non-registered public benefit organization, recoupment is done at market value. So please remember those sections and make sure that if you forgot to highlight it, you do highlight it in that regard. It's an important section. All right. So in this case, so you're going to look at donation of stock to PBO, public benefit organization. So you do recoupment at cost. So in this regard, you're going to do your recoupment at cost. What is the cost of your stock? All right. So in terms of this, the stock, you bought it for 17,000 each. So you're going to take 17,000. How many trend meals? By 5. So you have 17,000 times 5. Does it make sense, guys? Right. So you're sitting with that part there. So that's what we have, right? And then cost of sales, of course, there's no adjustment, right, in regards to that. So you can write down cost of sales, no adjustment. All right. Then you can say maybe section 11A, right? Remember, this is income and expenditure incurred in the production of income. So you write it like that. So what happens with a question like this? All right, another trick about tax. Sometimes we forget to accumulate marks as a result of normally what happens is we just rush into big things. All right, so you find that we write down about recoupment, right? Then you see, I'm done. But you forgot the question is saying if an amount there's a new effect, you should cut this section. So in order to avoid losing some marks, just make sure that you account for each and every transaction that takes place. All right. And then, so you're done. And then the cost of sales has been correctly accounted for. These trend meals were not included in closing inventory 30 September 2022. No accounting entries were made with regard to the donation. So it was an easy question in the sense that they're actually guiding you what was recorded and what wasn't. All right, and then we move on to 3. All right, so dividends received. All right, so 3. So 1,550,000. So it's important in regards to this also to have an understanding now. How do you deal with dividends? Now, what happens now is accountants, they treat dividends received as income. I'm sure you guys know that dividends received we treat it as income. So in regards to this, what does SaaS do? SaaS also includes dividends in gross income. I'm sure you guys agree with me there. So we do dividend received. All right, so dividend received. All right, so in regards to this, we also included in gross income. So I'm not sure of the exact section, all right, so but included in gross income. So you write down the narration, but it should be, I think it's section, I don't remember. Right?
It's 10K, I think.
Section 10K, no. Is it 10K? No, but 10K should be about exempt income. Section 10. So your legislation is structured like this. No? Section 1 to section around 9, right, which about those sheets, is about income, the amounts including gross income. Section 10 is about exempt income. Section 11 is about amounts deductible. So it can't be 10K. It has to be should be section 1. Section 1, gross income definition. 10K is about exempt dividend. You can check, all right? You can check on your legislation. That's section 10. It's about exempt dividends, 10K. So just be careful in that regard as well, all right? Though I'm not 100% sure about the gross income definition, which is in section 1, all right, which part exactly handles about the gross income. But please do check in that regard, all right? You see what I'm talking about. All right, then the next thing is you have exempt, right? It is also exempt, right? Then I'm sure, ma'am, that's where your section 10K now kicks in, right? So it's going to be exempt from your income in terms of section 10K, right? So how much is going to be exempt, right? So section 10K, how much do we exempt? Is it a local dividend? So in this case, a local dividend, right? We fully exempt, right? So 1,550,500. So it's going to be fully exempt. All right. So it's important, guys, that we pay some attention in this regard. Right. And then let's move on now to the next part. So we're done there, and then the interest. Oh, sorry. Let's look at the next part. So if interest received, they guide us to this part. So for the interest received recorded in statement of profit and loss and other comprehensive income regards to local interest on a fixed deposit account at a financial institution. So what happens to local interest? All right. So in this case, there's no exemption, right? Remember, this is not income. So the first thing is included in gross income definition. Right? So this amount is going to be included in gross income. And then you start exemption. So here there is no exemption, right? Why? So in regards to this now, the only section that exempt local interest, right, is only the one that applies in terms of individuals. So there's no interest exemption, local interest exemption in terms of this section. So only local dividends, local interest, for natural persons. So when you're dealing with natural persons, that's when it get an exemption. All right, so local interest exemption, all right, you can just do maybe section 24J, all right? So that's the one that governs our local interest. So there's no exemption in this regard. All right, or you could have there's section 10 as well. I don't remember the exact section, but section 10, which governs exemption for natural persons. So in this case, there's nothing for companies as well. All right. And then we move on to the next one. All right. The next one is about insurance settlement received. So 5.1. Let's look at it and see. Right. So 2 laptop computers, one belonging to Miss Lamini and the other one to Dimple. All right. Gym employee referred to note 8.4 below were stolen on 31 August 2022 when the finance team moved to a new office block that was recently erected. Now, before you go there, do you see the laptops were stolen? Now, what does your standard say about this? All right. So in this regard, once you have items which are actually stolen, think about capital gains tax, theft, fire. They're all deemed disposals. All right. So if you check your CGT, all right. So if there is a theft, destruction by fire, we will deem those as as disposals. So you think about those, right? So let's look at it, right? So when the finance team moved to a new office block that was recently erected, both laptops were purchased from a non-connected person, all right, on 1st of January 2021 at a cost of 67,000 each. The accounting loss and depreciation were recorded in statement of profit and loss and other comprehensive income during 2022 year of assessment. An insurance settlement for an amount of 55,000, including VAT for both laptops, was received by Viva Gym on 15 September 2022 from its insurer. Binding general ruling number 7, together with interpretation note number 47, allows a 3-year write-off period on laptop. Now, on this type of a question, there were so many things that you guys could think about. So you lost a laptop. All right. So in regards to this now, because there is actually a loss of laptop, you should be thinking about capital gains tax. All right. So in regards to this, think about capital gains tax, think about recoupment. All right. You also think about the warranty allowances. All right. So let's look at it and see. All right. So we have laptops. There were so many marks, all right, in regards to the part of laptops. Right. So the first thing, right, or the first mark that we're going to have was with respect to the depreciation. Right. So they accounted for depreciation. So in this regard, we just have to reverse the depreciation. We can agree that this is not a taxation type of transaction. So we have depreciation, all right, not a tax type of transaction. All right. So not tax transaction. All right. So we're going to reverse it. So depreciation, we add it back. So it's 350,000. And that's our depreciation. Right. Then after depreciation, now let's deal with the stolen laptops. Right. So in regards to the stolen laptops, right, like we said now, we have a lot of things to deal with. So the first thing, right, in regards to the laptops, you could have calculated recoupment on stolen laptops. Right. I know there's 2 ways that one can use to do the calculation of recoupment. Right. But I prefer this method, right, whereby I say selling price limited to cost. All right. So in this regard, how much did we collect from this company? All right. So in this case, we received an amount of insurance. They paid at 55,000, including VAT for both laptops. So in this regard, we received 55,000 times 2. All right, that's the amount that we received in regards to our laptop. All right, so 55,000.
So I think it was 50,000 for both, 55,000 for both.
Is it both? Oh, for both. Oh, thank you so much. Oh, I thought it was each. Oh, the each is on the cost. All right, thank you, man. So in this regard, that's the amount that we received, right? Then we multiply by 100 over 115. Remember, it says including VAT. All right. So let's just include another column to do our calculation. Right. So in regards to this, that would be the amount that we have. Right, so we're sitting with this balance. Right, and then less tax value. Right, so let's calculate our tax value. How do you guys calculate your tax value? It's cost less accumulated warranty allowances. So the cost of the laptops, for us in this regard, we bought the laptops for 67,000 each. Right, so we have 67,000 times 2. Right, so the cost of our laptops is going to be this amount times 2. So it takes us to 134,000. Then less warranty allowance or capital allowances. Right, so let's see. So we have 134,000 and SARS is granting us capital allowance of 3 years. All right, we see there, SARS is giving us 3 years. So let's quickly see when did we buy these laptops, right? So it's important. So in regards to this, all right, they were stolen on this date, but we want to see when did we buy these laptops, all right? both laptops were purchased on 1st of January 2021. Do you see? Now let's quickly see what is our year end. The company has a year end of 30 September 2022. So which means now, so from 1st of January 2021, so you have January, February, March, April, May, June, July, August, September. So that's like you use it for 9 months in the first year. So the allowance that you have there, so you divide by 3 times 9 out of 12. Right, remember, don't forget as well, the only time we apportion capital allowances is when section 11E, all right, applies. So the only time we do apportionment of our allowances is when section 11E is applicable. What is section 11E? Section 11E is when they mention about those interpretation notes and so forth. So when those sections are applicable, that's when we apportion. Then when we have other sections like 12C, section 13, and so forth, we do not apportion our allowances. All right. So that's the part that we have there. All right. So that's what we have. All right. Now let's look at this. So we have our allowance. So it's 134 times, okay, divided by 3 times 9 out of 12. All right. So it takes us there. We can record it as a negative, right? And then allowance for 2022. All right, for our laptop. So 2022, we're still going to have 134 divided by 3 times. All right. So let's see what's happening there. All right. So in terms of this, all right, here's the part. So we lost these laptops. All right. So it was stolen on 31. Oh, 31 August. So we have them from 1st of September. So the 1st of said our year end.
October.
Yeah, 1st of October. So we have them 1st of October. So October, November, December, January, February, March, April, May, June, July, August. So that's like 11 months, right? So we used in the current year, we use them for 11 months. So you multiply by 11 out of 12, right? So that's what we have there. So you have 134 divided by 3 times 11 out of 12. So it takes you to this allowance. So luckily, SARS will also allow you a deduction of this allowance in the current year. So your wear and tear in regards to this allowance, SARS is going to grant you a deduction there as well. All right. So now you can see, right, with regards to the calculation of your tax value. So you're going to take the cost less the accumulated wear and tear allowances. That's what will give you your tax value. All right, so in regards to this, your tax value will be sitting at this amount. Do you see? Now, your tax value is actually more than, all right? Your tax value is actually more than, it is more than your selling price, all right? Which means now there's a scraping loss, all right? So we call it the scraping loss, all right? So we have our scraping loss. All right, scraping loss in regards to this. So you're going to take 59556 minus 47826. All right, so it gives you your scraping loss in this regard. All right, with that now being mentioned, what happens if it was a replacement asset? What do we do in regards to replacement asset? You guys know?
What happens to what, sir?
If it was replacement assets, let's say, remember the laptops were stolen, right? And then maybe you had recoupment, and then the laptops were repaired.
So the recoupment will be at the, I don't know how to describe, but at the percentage of the lost asset. So, I don't know how to explain it.
You just put it how you'd write it. Sorry. How would you write
Okay,
it?
so if the allowance was 20%, the
Mm.
recoupment will be included in the calculation at 11,730 times 20 if it was a recoupment or a loss, I think.
Which section governs that?
Section.
I'm not pinning on here, right? If you guys know, you can also help out, right? These are important sections that sometimes they can ask you a discussion type of question. So it's important that we know that section. Which section is it, guys?
That was paragraph 65 and 66 of the 8th schedule.
65 and 66, yes. So of the 8th schedule is about the CGT. Well done, Dave. Right, so those are sections that you can't afford to actually forget. All right, that's good. Right, cool, guys. So we have our we're sitting now with our loss. All right, so in regards to this part of the question, so we're scraping loss. We're gonna record it as a negative amount there. All right, it's a loss. Well done. There's hope, guys. All right, makes me happy. Right, so scraping loss is done. Now the next thing, all right, let's look at we'll do capital gains tax, right? We're gonna do it, but we do it last. So they acquired the new laptops. So as you guys can see, did they insurance settlement of 55,000, all right? Well, they didn't acquire new laptops, so no need to worry, all right? So those sections 66 and 65 are not applicable. So which means the next thing would be capital gain. All right, I know now most of you guys love layout, you want to be fancy and all that. Guys, in the exam, the order, all right, let's say for example, you're going to say, I'm going to do the gross income, the deduction and all that, and then gross CGT at the end. It's not important. When you see a transaction, do your CGT, then you record the amount in this column. Why am I saying this? By the time you reach the end of your question, you want to come back to CGT. Either you're out of time or you forgot. So rather, do your CGT as you go by. These guys, they'll mark you. They'll still give you a mark as you go. All right. So yes, CGT, we take the proceeds. All right. So of course, in regards to this, the proceeds will be selling price minus recoupment. All right. But however, we don't have recoupment. So we're going to have the selling price. That's what's going to be our proceeds. Right. So how much did you receive from our insurance company? We received 47,826. Right. What do we do with the scraping loss? Does anyone know? So the scraping loss base cost is going to be, so it'll be more or less like tax value plus the scraping loss. So we add it to the best cost. You can check paragraph 20 right of your 8th schedule. It also guides in regards to this. So when you have recoupment, that's the one that you deduct your proceeds. But when you have the capital loss, right? So in this regard, the capital loss you deducted there. All right, so let's look at it and see what's going on. So we're going to have the tax value, right? So remember, base cost is cost minus accumulated allowance. So it will be more or less the same as the tax value. So it's going to be 59,556. All right, that's what we have. And then we add the 11,730. All right, so that's the amount that we have as our best cost. So which would take us to 59,556 plus 11,730. All right, so it takes us to the 71,286. All right, which means now the 71,286, right, minus this amount, it will take us to the loss. You guys know these rules. All right, so we're gonna have our capital loss, which is going to be this balance. All right, so you keep it like that, your capital loss, until you have capital gains. So you're gonna net it off to some capital gains here to come then. All right. Okay. Cool. So let's proceed, all right, and see what is going on in this regard. All right. So in terms of this, all right, we're done with the laptops. We move on to this. All right, on 1st of September, Viva Gym sold its second-hand manufacturing machinery to a connected party for 1,500,000. The machine was purchased new and unused during the 2021 year of assessment. The accounting profit and depreciation of this machine has been accounted for correctly. All right, recorded statement of profit or loss and other comprehensive income. All right, Section 12C allowance for the year on this machine was calculated at 200,000 and the capital gain 700,000. Do you see? So this is a past paper. All right, the question that we're looking at is actually a past paper. So, but it was actually made very easy. You know, so it's important that in the exam, of course, shouldn't expect difficult questions, right? They can give you each section, but this one was way too easy if you ask me, because they're even guiding section 12C and all that. All right, so they did the allowance, right? The allowance for 2022 was 200,000. All right, so we do machinery. All right, so we have capital allowance. All right, so they worked it out for you, 200,000. All right, so that's what we have. The capital allowance is 200,000, and then they worked out the capital gain as well, which is 700,000. But however, they did not work out for you for recoupment. That's where the problem is. So it was easy in a way, but at the same time, it was a little bit tricky in the sense that they did not include the recoupment part, right, for us. So we had to look at it, right, and see if it's possible to actually do the calculation of recoupment. All right, so let's see. So they gave us allowance for 2022 as 200,000, which means now recoupment. All right, sometimes we need to think a little bit. All right, so recoupment now is going to be selling price limited to cost. Now you're not given the cost. They never gave you the cost amount, right? You can see they only gave you the allowance of 200,000. So cost, right? How do you do it? So cost, so allowance for 2022 is going to be cost times 20%. You know, agree that that's how we go about it. So which means now this amount is what they're saying is equal to 200,000. So we solve mathematically, right, to come up with the amount. So if cost, right, is this, so we divide both sides by 20%. So which means cost is going to be 200,000 divided by 0.2, right? So which means the cost will be sitting at 1 million. So in that regard, cost of your asset is 1 million, right? And then which means now selling price limited to cost, right, to calculate your recoupment. So you're going to limit it to 1 million. Right, so you limit it to 1 million, all right, that's your cost, and then you deduct tax value. All right, so in regards to tax value, you take your cost, which is, of course, 1 million, all right, and then allowance 2021. So it was 1 million times 40%. So in this regard, it takes you to allowance 1 million times 40%, right? And then allowance 2022. So it's going to take you to 1 million times 20%, which is, of course, he has given 200,000. Right. And then which means now your tax value, all right? The tax value is going to be minus so it's going to be 600,000, I think. All right, so you have 600,000, which means the recoupment is going to be 1 million minus 600,000. It will take you to, right, take you to 400,000. If your recoupment is sitting at 400,000, all right, and then you have capital gain, they did the calculation for you. So it's 700,000. You keep it in this column, all right? Then you proceed to the next step. I don't know if there's any questions so far before I move on to the next part. Right, the next part, it says Viva Gym bought 6 newly built flats in a residential building consisting of 20 flats in total directly from a developer, a registered vendor on 25 July 2022 at a cost of 298,000 VAT inclusive. 3 of these flats are rented out to employee of Fever Gym at a discounted rent of 2.5 each per month, and the other 3 are rented out to outsider the company at 3.5 each per month. The rented contracts were applicable from 1st of August 2022. All right, so in regards to this, our taxpayer now is sitting with residential flat. All right, so the rent, so the first thing now is the rent that comes from the residential flat. We cannot agree that rent collected, both accounted and SARS treated as income. All right, so rent, right, residential flats, all right, so rental received. So in this regard included, right, in terms of gross income, section 1, all right, gross income definition. So it's already included, accountants included there. Now, the next thing now, all right, these are residential buildings. All right, so residential building now, they're going to qualify now for section 13(6). You know, so the residential building, they're going to qualify for section 13(6). Right, so what does section 13(6) mean? So it means, right, so section 13(6), it means you claim 5% allowance, right, on residential building if you acquire them new. All right, so now what is going on in regards to this? All right, let's look at it. Viva bought 6 newly built flats in residential building consisting of 20 flats in total, which means our taxpayer bought part of the building. They did not acquire the entire 20 flats, but they bought part of the building, which means they bought only 20 flats, which means now, in that regard, our taxpayer is going to qualify for 55%. Remember, they bought part of the building. When you buy part of the building, you qualify for 55%. The cost of the asset will be 55% in that regard. Right. Now, the buildings, they're more than 5. As you can see, there's 6 newly built flats, which means now you want to verify, you want to identify if they're low cost residential units. And also in regards to this, we need to determine if they're low cost residential units. So how are we going to do that? Right? So let's look at it to see now. So the low cost rule, it only applies to flats that are rented out to employees. All right, so you're going to do section 13(6) allowance. All right, allowance. All right, so you're going to take 55% times, all right, so the cost of the building, these ones. All right, remember, we are being told the other 3 flats are rented out to outsiders. So 3 flats, which is 3.5. All right, so in this regard, we are renting them out to outsider, you know, so we don't worry much about that. So 3.5, and then the cost is 298 each, inclusive of VAT. Do we deal with them inclusive of VAT or exclude VAT?
Exclusive.
Fine. It's inclusive, né? Remember, on your VAT rules, residential buildings are exempt from VAT. All right, so the amount always include VAT. Go back to your VAT if you forgot. It's part of the exempt items, right? Residential buildings, right? Residential accommodation is exempt from VAT. All right, so in this regard, the amount is always inclusive of VAT. All right, so 55% times 298 times 5%. So sorry, the number of buildings is 3 times 3. Right, so you have it looking like this. Right, times 3.
Times
And then,
an extra 5%. Sorry.
no, but that applies if it's a low cost. And remember, these ones are not rented out to employees. So we'll need to look at the other ones that are being rented out. So let's look at, these are the flat, all right, where you're renting out to employee, the 3 flats. So we need to determine if it's low cost units or not. All right. Remember, I think it was Francisca some other time was asking about that section when you did similar questions
Yeah.
as to this. So
Said 350.
yes. So in this regard, let's look at the 2.5, right? So the 2.5 rent divided by 298. All right. So 2.5. So you can show the examiner, all right? So in this case, you're sitting with a cost of 2.5, all right? So you have 2.5. So low cost units, all right? You're testing. So less than 1%. This is section 1. Remember when you're section 1 where they define about low cost units. So the rent has to be less than 1% of the total building value. So less than 1% of purchase price. All right, so that's what we want to test. And also the cost. Oh, was it Mimba who said 350? I'm not sure if it's right, but the cost also has to be less than 350. So we can see the cost of our unit is less than 350. So we good. So in regards to this, we're gonna take 2,500 divided by 298. We want to see now if it's less than 1%. All right. So 2,500 divided by 298. Right? So in this case, it gives us this. So let's see in decimal how much we get there. Do you see 0.84? So it's less than 1%. 1% of purchase price. So in this case, it's less than 1%. Therefore, the units are a low cost. So we have them as low cost, which means section 13.6. I hope Neo's here. All right. Now this is where your additional allowance comes in. All right. So you're going to include now on the 298 times 3 units times 55% times the 10%. Do you see where we are, ma'am? So it was important now
Yes.
that you pick in regards to this question. Right. So we're sitting with it like this. Times 3 times 55% times 10%. But otherwise, you know your work, all right? What just needs to do is polish up with a little bit of questions, all right? That will help you as well to identify some of these things. Right.
So, sir,
Yes, ma'am.
so like, have we always been like separating the allowances? Because it seems like we calculated it twice. I remember when we were doing it previously, we did it all at once. It was 10% on one line.
Yeah,
We
but
tested
remember,
first and then
okay, but remember, okay, can you guys go to section 1? No, not section 1. Can you go to section 13.6 actually? I think at the bottom where it mentions about close to 13 sept, somewhere around there, where it mentioned about an additional 5%. Which units qualify for that? You guys have the legislation. I don't have mine nearby, but I remember they did mention close towards the end of section 13.6. They mentioned about additional 5% allowance. What does it say? What do we have? Anyone, guys?
I'm not seeing the part side.
There's a part that may. Okay, just 1 minute. Let me just get my legislation. She's the one
yes,
who
I'm here,
asked
sir.
the apportionment. So here we do 3.5 divided by 298 times 100 to see if it's low cost. Are you with me there, ma'am? So
Yes.
want to check if this part, remember there's 2 types of renter. Want to see if this renter amounts to a low. Let me just record. So want to test if this part amounts to 1%. Do you see it's 1.1%? So which means the low cost only applies to the units that is being rented out to the employees. The other units, their rent amount is more than 1%. You can see it's 1.
So they only, okay, I understand now. Yes.
So in that case, they only get they only get the 5%.
5%.
It's not additional, yes.
Okay.
All right, cool. Then, so this part is done, or done, guys. And then let's move on to the next part. So we're done with 5. All right, profit on second-hand machine. We can all agree that profit, this is an accounting terminology. So SARS doesn't deal with that. So we need to reverse the profit. All right, so profit on sale of machinery. All right, so in this case, accounting transaction. So you can just write it's an accounting transaction. All right, so you need to deduct it. So it's 500,000. So you minus. All right, so that's the part that we have. Let's move on to the next part. So we did that. And then operating expenses, we dealt with depreciation, right? Yeah, we have reversed depreciation to 350. And then accounting loss on stolen laptop, we need to add it back. So accounting loss, laptops, right? We need to add it back. Right, how much is the loss? So the loss is sitting at 6,000. Right, so we're gonna add it back, right? So it was deducted, so we add it back, right? So that's how we go in that regard. And then the next part is donations. Oh, this one is we have dealt with, right? And then insurance expense, they referred us to part 7. Let's see what's going on in 7. What is 6? Why did we jump? Oh, 6 is at the point. Okay, let's look at 7. And also Viva incurred insurance premium 56,640 during the 22 year of assessment. This amount 42,000 less to an amount that was paid by Viva on 1st of September 2022 for the insurance for the period 1st of October until 30 June 2023. This amount of 42,480 was not expensed in statement of profit and loss and other comprehensive income for the 22 year of assessment. This was the only prepayment made by Viva for the 22 year of assessment. They were actually giving you lots of hints. So in this regard, all right, there's so many things that we could have looked at. All right, so the 56, the insurance premium, all right, it includes, all right, 42,480. So now what's happening? Accountants expensed, right? So the normal thing, of course, accountants, they do the right thing. They only expense the correct amount, right? So the accountants work with accrual basis. So they only expense what has been accrued to you. But now, in regards to this, now you're sitting with a prepayment, right? So what is the rule with regards to prepayment? SARS now, okay, let's first deal with insurance expense. All right, so in regards to this, the insurance expense, of course, it was correctly accounted for. All right, so in terms of this, the expense was correctly accounted. All right, the insurance expense, section 11A. All right, so it was correctly deducted. All right, so we're good there. And then prepaid insurance. Now, accountants now, they treat the prepaid insurance as a prepayment. So it's an asset to the accountant. But SARS comes in and say, if it's less than 100,000, or if the prepaid is due within 6 months, you can deduct it. So which means now, in regards to this, the 56, sorry, not the 56, the 42,480, which they classified as a prepayment, we now need to deduct it. Right, so 42,280. I hope you guys know that section, right? All right, so we need to deduct it. In terms of section what? It's section 23H, right? So we deduct the prepayment in that regard. All right, and then we move on. All right, after that, so we're done with that insurance, and then we have salaries and wages. All right, let's quickly go down. What's going on? All right. So that's 8. So salaries and wages paid amounted to 4,850,000. All right, so we both know that both accountants and SARS, they all treat salaries and wages as expenses, right? So that's fine. So salaries and wages So it's section 11A, right? The incurred in production of income. So we deduct these amounts, right? So we're going to deduct it. Both accountants and SARS, they treat them the same. So we're good to go. Right, let's move on to the next part. So Viva Gym made payment of 150,000 to a warehouse manager that retired on 1st of December 2021. This payment was made the warehouse manager to sign an agreement with Viva Gym not to render any services to competitors of the company for 5 years from date of payment. So in regards to this, how did we deal with that? All right, so it's important that we can see what's happening in terms of this. All right, so that's the part, right? So they only included 5,026,000, right? So which means the 150 was also included as an expense. So in terms of this, what is going on? We need to edit back. All right, this amount in terms of SARS, you don't get a deduction for the full amount in the first year, but SARS comes in and says what? Restraint of trade. I hope you guys remember that. So when your employer pays you a form of compensation to avoid you from opening a similar business, right, in the nearby area, or to keep their secret safe, it's called restraint of trade. So in regards to this, that's deductible, all right, but there are certain rules that apply. So accountants deducted the full amount, but now SARS is coming in with some rules. All right, so restraint of trade. Right, so in this case, accounting transaction. All right, so accountants, they deducted the full amount. So the accountants now, they deducted the 150. So we need to edit back. All right, and then taxation rules. What does tax say about restraint of trade? It says deduction is lesser of, right? So lesser of what? 150,000 divided by 3, right? And 150,000 divided by the restraint of trade period. So in this regard, the restraint of trade period is actually 5 years, right? So in terms of our equation, we can see you being restrained for a period of 5 years, right? So whatever that gives us the small amount, that's what we deduct, right? And then we have 150 over 5. So in terms of this, we're going to deduct the 30,000. So that's the amount we get as a deduction for restraint of trade. All right, I hope you guys still recall in this regard what's going on. All right, and then we move on, right, to the next part. So done with restraint of trade, and then 15 August.
That's deduction with respect to restraint of trade. Is it a once-off?
No. So you get it every year. So what SARS says now is they said instead of you collecting the whole amount of 50,000, getting a sort of 150, getting a deduction, they allow you an accelerated allowance, right, of the less of this. So the following year you get the same allowance, the third year you get the same allowance as well. All right.
Okay, thank you.
All right, so you get it each and every year until it's fully deducted. All SARS didn't want is for you to claim the full amounts at once, right? So, but you can still get it in the years to come. All right. So that's that part, right, about restraint of trade. It's section what? Section 11, right? Just to maybe somebody wants to go and refer. So it's section 11, 11C. Right? I think it's, yeah, it should be section 11C. Let's quickly check here. Yeah, 11CA. Yeah, 11CA. All right, small letter C and the capital letter A. So just after the general, actually it's under general deduction formula. All right, so that's where you get it there. All right. So restraint of trade, you're done there, all right, and then let's look at the next part. So 15 August 2022, Viva Gym paid an annuity which amounted to 26,667 in total for the months of August and September to former employee Mr. Maso, a health 35-year-old who won the lottery jackpot and decided to stop working on 31 July 2022. Right. So what is the gross income definition now? State, right, in regards to this. So in terms of the gross income definition, of course, annuities are included in gross income, but unfortunately, we are the ones who are actually paying this annuity. Right. Now, annuities which are deductible for tax, right, is with regards to, remember, this guy is no longer employed by the company. So annuities that are deductible, right, it only applies if this taxpayer resigned as a result of ill health, right, as a result of death, as a result of a disability. So that's the only time that you get, and even old age. So when you talk about old age, you are referring to 55 years and above. So that's the section, that's the only time you get this allowance. So in terms of this, but however, Mr. Health now is 35 years and is very healthy. So he's not going to get a deduction in this regard. So, but however, our taxpayer, all right, they deducted the 26, which is accountants, of course. So the annuity, we need to edit back. All right, so we need to edit back to our calculations there. So you can see we're sitting with 26,667. So we add back 26,667. Right, remember the taxpayer is not you. Right, let me just quickly see the section 11 as well. Right, just to quickly guide you, right, in case you want to see what's going on. Right, it's annuity, right, section 11M, right, just in case that somebody wants to look at it. Section 11M, small letter m. Right, so it talks about former employee, right, provided the resign as a result of those things that we just spoke about there. Right.
So,
Yes, ma'am.
so if this person was ill,
Mhm.
what is the deduction on this annuity? I forgot how
So
it works
you're gonna
again.
get the annuity amount.
The
So
full amount.
yeah, it was
Okay.
26,667. You're going to get the deduction. So in other words, both accountants and SARS are going to do the same treatment. Right.
Okay.
Right, then we have Paul Mukwena, not disabled, has been in the employ of Viva Gym since 1st of October 2020. She graduated from Gauteng University with NQF Level 7 qualification and entered into a 24-month learnership agreement. So definitely you're going to meet learnership agreements, so I urge you to look at them as well. With Viva Gym, on the employment debt, the learnership agreement is registered with the relevant sector, right, education and training authorities SETA. And Viva Gym is compiled with all the requirements for the skills development. Impol received remuneration. But before we go there, let's look at this part. So what happens in terms of learnership? What do you get? So
Completion allowance.
Hmm?
You get the completion allowance.
Right, but before we get the completion, remember our taxpayer entered into the learnership. What happens in regards to that? Are we going to go straight into the completion? What happens?
For the learnership agreement.
Hmm?
Or receive an allowance for that learnership agreement.
So what Mem is saying, right? Okay, let's be clear. Let's do this. So our taxpayer entered into the learnership on 1st of October, as you guys can all see, 1st of October 2020. That is the period that we entered into the learnership, right? So we entered into the learnership on this period. Now, we're in 2022, which means they entered in the learnership during the 2021 period. We're in 2022. Do we qualify for an allowance every year, or we only get the allowance when we enter and when we complete? Let's answer that part. Is it an every year thing, or we only get the allowance when we graduate? or successfully completed the learnership?
Every year.
Every year. Ne? So we're going to get our allowance every year. So please, guys, don't get confused. Ne? So you as a taxpayer, you get your allowance each and every year, even though the taxpayer entered into this deal in 2021, I mean, during the period, it's more like, think about it practically. When you're doing your articles, your employer will claim allowance the first year that you studied your articles. But let's say you studied the articles half year the year. How much does the employer claim? Is it the full or their portion? It's a portion, right? Always remember that. Ne? So in terms of learnership, if maybe you entered into the contract in the middle of the year, they apportion it. But the following year, they claim the full allowance. All right? Now, let's look at this. We studied your articles. All right? You're doing maybe your SIPA, your SICA, whatever articles that you're doing. So you entered into the learnership. Your employer will be claiming these allowances each and every year for as long as you're still with the company. You've not yet completed your learnership. All right. So that's one thing. Now, so in regards to this, how much are we going to claim? How much do we claim?
So say 40,000 times the months that are remaining for the year.
40,000. All right, so let's look at it. It's NQF 7. What is the allowance for NQF 7? Remember
50,000.
It's how much?
50,000.
Is it 50? All right, can you guys go to
50
section?
or 40?
All right, can you guys go to section 12H? Just to avoid the confusion, go to section 12H. All right, you see the allowances that you have in regards to learnership. It's important, all right? So you tell me how much it is.
40,000.
Is it 14?
Yes.
Right.
And yeah. Under 12H.
12H.
Isn't it 20,000?
So
No.
now I'm getting a lot of them. So how much do we get, guys? You have your legislation, right? So how much are you guys gonna get?
Yeah.
How much do you
It
give?
says yes, under Skills Development Act 1998. There is a paragraph 2A, part 2.
Okay, wait.
The last sentence.
Paragraph 2A, part 2. Okay.
Yes. That agreement was entered into.
But wait, it's for which learnership now?
This one.
You need to know your learnership. So she's looking at the paragraph that we need is 12H, subparagraph 2, capital letter A. Do you see that? That's the one that talks about who holds a qualification from NQF levels from 7 up to 10. So what is your allowance? All right. So in this case, they must be in that year be allowed to be deducted from this income derived by that employer from the trade in amount of 20,000. The one that you're looking at, the one that 40,000 that you guys mentioned, is about a taxpayer who is in NQF, which is less than 7. Do you see that? So just be careful in regards to this. So when you have NQF, like you guys, you guys they've done your tertiary, so that's like you're sitting with NQF 7, and there is no disability. So in that regard, you qualify for the 20,000. So allowance. All right.
Okay.
So you're gonna get the 20,000, right? Does it make sense?
Yes, thank you.
All right, cool. So
From my side, I thought it was a disability. Okay.
No, okay. No, a taxpayer does not have a disability. So what if the taxpayer had a disability? How much was going to be the allowance? we add 30,000, right? Is it another 10? 30. I think we add 30. Let me see. I remember highlighting that.
Yes, it was going to be 50.
Yeah, so it was
50.
going to be the 15. So just to help someone who never highlight their flag, where is that section again? Talks about the 30. Is it like subparagraph 5? Am I right?
Paragraph 5 cap A.
Right, 5 cap A. Right, cool. So in this regard, so it's gonna be 30. And then if it was someone who is in the lower learnership and then disability was gonna be 60, right? So please guys make sure of that. Right, then we do completion. Right, so how much is gonna be the completion allowance? So it's gonna be 20,000 times 24 months is like 2 years, right? So multiply by 2. Right, so which gives us minus 40,000. So please, guys, please, guys. One thing that I can be sure with you, all right? Text. In the test or in the exam for text, when you see calculation questions, you should get all the marks. Please, you can't afford to lose. I know with theory is subjective. That's one thing for sure. Because with theory, you can wake up. The problem with theory on text, there could be so many sections. Then you focus on one section. You think you nailed it, but you missed another section. So theory, yes, we love it, right? That's good. But theory, you find there's section on top of another section. So which is a problem now. Maybe there could be 4 sections being examined. So with me, right, I'll be honest with you. I'll make sure whenever I see a calculation question, they're saying calculate taxable income, I make sure I try to get all the marks because I know this is plain. All right, this is what I know. I have to make sure I get all the marks. So I urge you, I'm not saying the exam is going to be theory only. It's going to be mixed theory and discussion. But when you see theory, 40 marks, you should praise the Lord and say, hey, thank you for this. Because there is going to be discussion, theory, a little bit of discussion, of calculation. So make sure you collect the marks. Right, then the last part, in regards to this, of course, with respect to this, let's just look at, there's a dividend. So Viva Gym paid an interim dividend of 43,000, right, to all its shareholders. So what happens to this dividend? What do we do about the 43,000? So accountants, dividend paid. Well, how do accountants deal with the dividend paid?
They subtract it.
Are you sure? Hmm?
Yes, they paid it.
All right, so there's 43,000. But remember dividend paid, right? Under our company name is Viva Gym. So dividend paid, accountants under normal circumstances, it's not an expense, right? It so happened that these guys did deduct it, but dividends paid, we deducted in the statement of changes in equity. If you guys recall, dividends paid is deducted in the statement of changes in equity. We deducted from the retained earnings column. It's not an expense, right? So dividend paid. Unfortunately, this accountant deducted it there, but it wasn't supposed to be there. And then what happens to SARS? Dividend paid. What do you do? Is it an expense? What is it? They paid a dividend to the shareholder. What is it? How do SARS deal with this? Dividend paid. Is it deductible? Not in production of income. Right? So this amount was not incurred in production of income. You're just giving these guys, so you don't deduct it. But however, dividend paid. All right. So it's not in production of income. We're gonna add it back. All right. How much is it? It is sitting at at this amount, 43,000. Right, the last part, right? I know time is late, right? But it's just going to discuss with you guys in regards to this. Right. What do you guys remember about foreign exchange transaction? Right, it's not a big thing, but we need to look at it in this regard. I think maybe let's look at it on the next slide. Are you guys in a rush? Or should we look at?
No.
You're not. All right.
No, we're not.
Okay, cool. So let's go to 6 and see what's going on there. So 6, transaction 6. Here it is, other expenses, all right? So the impact of load shedding in South Africa is a significant impact on the business operation of Viva Gym. As a result, management decided to purchase and use solar panels, which are to be installed on the roof of Viva's Gym's manufacturing building. Solar panels. All right. Okay, before I go anywhere, you know, they test your knowledge sometimes, né? What is the new SARS rule about solar panels? What allowance do you claim? In terms of the current budget speech, not the previous one, but the current one. What is our allowance there? Says 150%, right? So to promote, right? Remember, they're trying to promote you guys to make use of solar energy. So if you buy solar energy, right, for business, even for household, you get 150%. Right, good. And then on 15 June 2021, Viva Gym purchased solar panels. The panels produce photovoltaic solar energy exceeding 1 megawatt. Which section deals with renewable energy? You guys know?
Section 12B.
12B, yes, that's good. So section 12B, all right, that's the one that you have. So you go to section 12B, but now 12B now, it has a limitation, all right, in terms of the megawatts that you claim the allowance. So let's quickly go to 12B, all right, so that we can see if our taxpayers are able to claim the allowance about renewable energy, all right? Those are some sections which are hidden, but should make sure that you also know, all right? So in terms of section 12B, it says, all right, so you look at hydropower, section 12BH, all right, so it talks about, if you look at subparagraph 3, it says hydropower to produce electricity of not more than 30 megawatts, all right? So they're looking at 30 megawatts, all right? And then photovoltaic solar energy not exceeding 1 megawatt. You see that? So these are some sections, right, that you need to make sure that you run through as well as you highlight as well. All right. So with regards to this section, we're producing more than 1 megawatt. So what happens now? Right? What will be the implication, right, in regards to this section? All right. So it grants you an allowance. All right. So section 13. Let me just look for the part where they grant you the allowance so that you can highlight as well. Section 8 of B subparagraph 2A. All right. So subparagraph 2A, it says, all right, in the case of an asset other than an asset contemplated in paragraph B. So paragraph B is talking about because they removed it. Oh. All right, so in this case, they allow you an allowance of 50%. All right, so they allow you an allowance of 50%. This is 12B subparagraph 2. All right, subparagraph 2A. All right, where it talks about the 50% in the first year and the 30% and then another 20%. All right, and in the case of asset contemplated in subparagraph 1H to BB, 100% of such cost. So in other words, if your asset produces less than, all right, if it's a photovoltaic solar energy, all right, that produces less than 1 megawatt, you claim 100% allowance, right? In that regard, all right? So if it's less than that, all right, in terms of that, you get that allowance, all right? And then you look at hydropower to produce electricity of not more than 30 watts, claim also 100%. But if it's more than that, that's where you get your 50%. So as you guys look at that section as well, it's quite an important one. Right. At a cost of 35,000 from a supplier in the United States of America, and this state paid a deposit of 30,000. Right. So the solar panels were shipped free on board on 15 July 2021 and were delivered to Viva Gym premises on 1st of August 2021. So with regards to this, all right, what is going to be our transaction date? Which spot rate do we use, 15 July or 1st of August? So
15 July.
15 July, on the day the goods are shipped free on board. That's good. And then import duties of 12,500 and VAT of 7,800 were payable in importation. The remaining 5,000 was paid on 1st of August 2020. So let's deal with that part, right, before we go anywhere. So we acquired, right? We acquired this asset, right? So there's a lot of things that we had to look at here, right? So we have solar energy, right? So let's look at it. So in regards to this, right? So we have the purchase price, or actually the cost, going to be made up of purchase price. So we have purchase price, which is sitting at 35,000 US dollars times. So the spot rate, right? So you're going to use the spot rate on the day that we bought these assets. So we said 15 July, right? That's what Neil said. So it's 15 July. So the spot rate was sitting at 16.57. So you're going to multiply with 16.57. Right, so that's our spot rate. So it's 35. Oh, actually it's cost. Right? So 35,000 times 16.57. So give us there. And then what else do we include? So we're going to include other cost, right? So we have import duties, right? So we're being told that it was shipped on this amount, then import duties of 12.5. So import duties. So we have 12.5. So we add that, right? So you're going to add that. What about VAT? So VAT is refundable, né? So we don't include it. So says any taxes that are refundable, we don't include them when you're calculating the cost. Right. So in this regard, let's look at it. So the VAT that is refundable, we don't include it. All right. And then, all right, so let's see, what else do we have? Viva Gym obtained a short loan, all right. Local bank, all right, on this case of 15 June, in order to pay for the deposit, that incurred interest of 45, of which 10,000 is for the period 15 June 2021, 30 June 2021, and 32,000 for the period on 1st of October 2021 to 30 June. We'll borrow this, all right, and then the electrician charged Viva Gym an installation fee of 80,000, and the solar panels were brought into use on 1st of December. The group accountant did not make any accounting entries in respect of any of the other expenses. So we have installation fees, right? So we add installation fee, right? So it's sitting at 80,000, right? So we then add. So this is our total cost, all right, in regards to asset, right? And then, so you're gonna do our section 12B, all right, allowance. All right, so section 12B, in case you guys want to look at it. So section 12B, and then we said more than. Right, sorry about that. So my girl won't sleep. up until I tell her to go and sleep. So that's why she's crying, I'm sure. Right, and then we have 672 or 50 times %. So it's sitting at that. So that's the allowance that we claim in terms of this. So that's the part in terms of the allowance, and then so that's that, right? And then one could mention, right, so in regards to this, maybe you could mention, right? Remember the asset was brought into use, the installation, right? You can see the installation. They were brought into use on 1st of December 2021, which is the current year. So that's the year they brought it into use. So the purchase price was in the previous year, right? If I were you, all right, so what I would do is purchase price, all right? So it assume it was bought in the current year. So I'll say purchase price. I'll say capital in nature, all right? So in this regard, you don't get a deduction. Import duties are also, call it capital in nature. This will also increase your chances, all right? So you're telling them that these amounts, you don't get a deduction. Then you record your 0 there, and then your 0 there. Right. And then the next thing, all right, so you have that. Then so how much they pay? So they bought a deposit of 30,000, and then the remaining 5,000 was paid on 1st of August 2022. So here's a question or the problem that you're sitting with, right? So so they bought this asset on 15 June 2021. So which is sort of 15 July, 2021, which is in the previous year, right? Remember our year end is 30 September. So that means we did this foreign exchange rate on this date, 30 September, right? We did the calculation of the foreign exchange rate. We compared 1657 and 1692 regards to the trade payable. And then on 1st of August, which is this date, we also need to compare. Now you're going to see now, right? So in regards to this, right, we're actually going to gain in regards to this transaction. If we had paid this person on 30 September, we could have paid at a rate of 1692. So in other words, we could have paid 5,000 times 1692. But however, we settled on 1st of August, you can see the rand is gained, which means we're paying less. So it's going to be 1426 times 5,000. So we're paying less money, all right? So in regards to this, so there's foreign exchange gain, all right? So we're actually saving. So it's 5,000 times in this regard, 1692 minus, right? Minus what? Minus 1426. Right, so in this regard, so we have a gain 5,000 times then bracket 16.92, right? Minus 14.26. Right, so it will take us to 13,300. So that's the gain that we have. Which section governs those foreign exchange gains? You guys remember? Section 24L, no? Right, and then which section governs about the exchange rate? Which exchange rate we're gonna use? Section 25D, no? So you should also know those sections, right? So there's section 25D. So what does section 25D say, right? In regards to transactions, it says if it is a company, all right? So the company they'll exchange, they'll use the spot rate as a rate of exchange. But if it is a natural person, which is me and you, we have a choice to choose between the average exchange rate as well as the spot rate. So whatever is beneficial. So normally for individuals, which is me and you, we normally use the highest, not the lowest, right? We normally use, no, we use the highest so that we gain the better allowance in terms of this. So we use the highest rate so that we claim a high allowance as well as a lower capital gain amount. So the highest rate between the spot rate and the average rate is the one that we use so that we can claim a higher allowance. All right. So natural persons, they use the rate which is more beneficial to them. Right. And then we move on now, right, to the next part. So we're done with that. Let's look at what else do we have. So we did that. There's a loan. All right. So Viva Gym obtained short-term loan from the bank, all right, to pay the deposit of 30,000 and incurred interest of 42,000. All right. And then this 42,000 in regards to the loan now, all right. So we're being told now that a part of it, all right, of which 10,000 is for the period 15 June to 30 September. So this is the prior year. And then 32.5 is for the period 1st of October to 30 September. So which means interest on loan, we're just going to deduct here. All right, so interest on. All right, so let's just quickly see what did the accountants do, all right, in regards to this transaction. All right, so interest on loan, looks like our guys, who is the accountants, they never did anything in this regard. So there was nothing, so we're just gonna deal with it. So we deduct the 42,000. All right, so section 24J. All right, so section 24J is the section that governs this part. All right, so we're gonna deduct this amount. So 32, all right, so 500. All right, so basically this is it, right, in terms of the first part of the question. I think this is the last time I do calculation questions, right? Unless maybe if we're looking at employee benefits in the other part. In the next class that I would see you guys, we'll be looking at what do you call it? The discussion type of questions, right? So that's basically where we are in regards to this. Any questions, guys?
Okay, let's for that interest, let's say we were given the amount in Forex. Would we translate them at the average rate or spot rate?
All right, that's a good question. All right, so in regards to this, so she's saying, all right, let's say we're given the interest. So for accounting, all right, we can all agree that in regards to accounting, we deal with the average rate. Right? That's the rate that we use. The same principle. If you're full confused, right, in regards to this, you open a legislation, all right? So you go to section 25D, all right? So go to section 25D. That's the section that governs the translations. Are you guys there? Let's quickly run there, all right, and see now. All your answers, you find them in that section. All right, 25D. Right. So it's about determination of taxable income, right? In foreign currency. All right. So in regards to this, that's what we have. So what we normally do, all right, with respect to a question, it now depends. If it's a company, right? So if it's a company, of course, I will use the average rate. But if it's an individual, we still me and you, all right? So in terms of section 25D, you still have a choice. You can choose between the spot rate and the average rate, all right? So you can run through section 25D to see what's going on. But 25D, it allows you, all right, as a taxpayer, natural persons, me and you, to choose between the most beneficial rate, right? I hope I did answer you in this regard.
Yeah, thank you.
All right. Cool, guys. So happy starting, guys. All right. I'll see you guys soon. So I see now you guys are active now. All right. I don't know, maybe you're discouraged by the test. I'm not sure. I see the test results are out and everyone is coming. So I'm gonna also sometimes, you know, when you guys don't have much energy, it also drains me on the other end. So now we can go full swing as well. And I promise you that I'll commit equally just like you guys. Right. Cool, guys. Good evening, guys. Bye.
Thank you.
All
Thanks, Ian. Bye.
Thank you, Ian. Bye.
right. Bye.
Bye.